This is Matthew Kratter from Trader University, and today I want to answer the question, why is Bitcoin lagging stocks? You probably know the answer, but we're going to get into some other very interesting things in this video, so make sure you watch it all the way to the end. So we actually had what was a pretty good week in the traditional risk asset markets. We had a much weaker than expected CPI. It was still relatively high by objective standards, but the market seemed to like it, and the market began to price in a Fed pause. We saw the target rate for the next Fed hike, the next Fed meeting in December, move from about 75 basis points to about 50 basis points. And the stock market, as I said, really liked this. Bond yields came down as well, with the benchmark 10-year Treasury yield falling markedly, as you can see over here. Now, in a normal week where we got a cooler CPI number like that and stocks jumped 6%, you would have expected Bitcoin to be up somewhere 2x, 4x that, so up 12 to 24, 25%. Instead, it was down about 20%. So it underperformed stocks by an enormous amount, by as much as 45%. We can see here the S&P up about almost 6% for the week, and then Bitcoin down 20%. Obviously, the NASDAQ was up a little bit more than the S&P 500. I really enjoyed this headline from The Onion. Crypto confidence soars after CEO defrauds customers just like real banks. So crypto has definitely arrived as a real world thing here. But all jokes aside, the reason for Bitcoin underperforming obviously is this FTX contagion. In a liquidity crisis, if you're a portfolio manager, even if you're an individual, you dump everything you can when you panic in order to raise cash. And if you get margin calls, you are being forced to dump this stuff whether you want to or not. And the way you handle this, obviously, is you try to get out of your most liquid assets first. You're not going to be selling some NFT that just doesn't have a liquid market. You're going to be selling your Bitcoin because it's still the most liquid digital asset out there. And right now, Bitcoin is that baby being thrown out with the bathwater. It's a lot like March 2020 in that way, when all crypto sold off. At that point, of course, stocks were selling off as well. Bitcoin is not a tech stock, and we always have to return to these first principles when we see weird movements in the market. There's been a lot of correlation between Bitcoin and tech stocks. This week, that correlation broke down. Unfortunately, it broke down the wrong way, which is discouraging to see. But if you understand Bitcoin, this is not going to bother you, because Bitcoin is not a tech stock. It's not an unregistered security issued by a corporation, something like FTT, which was the FTX token. And Bitcoin is not some sort of wrapped garbage with counterparty risk, and we're going to talk about that in a minute. I'll just ask you, if you're finding this video helpful so far, to please subscribe to this channel if you haven't done so already. So when I'm talking about what happens with wrapped garbage, when you wrap a cryptocurrency or you wrap anything, you are basically depositing the real thing with a custodian, and then you're issuing tokens against it. And the problem with this is you are basically having to rely on the custodian. So you never want to buy wrapped Bitcoin. We can read here that wrapped Solana, which was issued by FTX, is now basically worthless, even though Solana still has some value, probably on its way to zero as well. But this is the problem with wrapped tokens. You really have to trust the counterparty, which is the complete opposite of the whole Bitcoin ethos. Bitcoin, as we've been saying for the past 2 years, is not crypto. It should not be grouped with these other assets, which are basically just unregistered securities issued by software companies as sort of a regulatory roundabout or workaround. And the crypto bros are finally figuring these things out. We talked about the Bankless guys, I believe, yesterday. Here's David Hoffman from Bankless saying, for the first time ever, I feel like I have nothing to stand on when I say crypto is good for the world. Everything good and cool about crypto is theoretical. Everything bad about crypto happened in 2022. So some of the largest pushers of DeFi and Ethereum and Solana are basically waking up to the truth. You're not seeing these sort of sayings from Bitcoiners who really understand what they're doing. Bitcoin is the only digital money in the world that was not issued by a government or a corporation. It's the only credibly scarce digital asset. And the scarcity, once you understand Bitcoin, and we've gone into this in depth on this channel, this scarcity is enforced by the various equilibriums and incentives of Bitcoin miners and nodes and hodlers and other actors. And this means that Bitcoin is a bearer asset like gold. And there are a lot of people this week who hopefully learned a lesson about what a bearer asset is. A bearer asset is something, when it's in your hand, no one can take it away from you except through physical force. They can't freeze your account. They can't prevent withdrawals, as we saw with BlockFi and FTX. And with a bearer asset, there's no counterparty risk. You don't have to worry about the company you're holding it with going bankrupt. No one can freeze or turn off your asset. If you're holding Bitcoin on a hardware wallet, no one can freeze your Bitcoin. If you're holding a chunk of gold in your pocket, no one can turn off that gold. Obviously, Bitcoin is much, much superior to gold, especially in the 21st century, which is a digital century. And we don't really have time for shiny yellow rocks. That's the previous financial system before the fiat system. And we're interested in a Bitcoin standard. But my greater point here is that Bitcoin is a bearer asset. When you hold it, it's yours. Bank accounts, brokerage accounts, crypto accounts can obviously all be frozen or stolen. And unfortunately, we're seeing this happening even more at FTX. Now that FTX has just declared bankruptcy, there's still funds being stolen out of those accounts. Bitcoin cannot be stolen if you hold your own private keys, unless someone takes those private keys or finds your private keys. So you should move your Bitcoin off the exchange. Don't have anything on an exchange right now, and onto a hardware wallet like a Trezor or a Cold Card. Then if you use multi-sig, which I've talked about, it's even safer because your private keys can be spread around the country. If you want to learn more about multi-sig, I have this video here, the best way to store large amounts of Bitcoin, and I'll link to it in the description notes below. I think it's interesting to sort of zoom out and get some perspective here. Obviously, we don't know if Bitcoin has bottomed yet, but if we compare this to the 2020 implosion, where Bitcoin bottomed in the 3,000s, the 4,000s, depending what exchange you're looking at, in 2022, Bitcoin has so far bottomed somewhere between 15,000 and 17,000. We're sort of chopping around in that range right now. And it's a little bit more than 5x higher than where it bottomed just 2 years ago or 2.5 years ago. Again, is this the exact bottom? I honestly have no idea. But if you like Bitcoin, if you've studied Bitcoin, if you've watched my videos, if you've spent hundreds of hours studying Bitcoin and are waiting to buy the exact bottom, you still don't understand Bitcoin. It's much better to dollar cost average. You can store some US dollars or other fiat on an exchange if it has FDIC coverage. There's no risk in this. So what you do is you move your dollars to the exchange where you want to buy Bitcoin. You let them settle, and that way, if the exchange goes under, and you have, at least in the US, if you have FDIC insurance, you'll get that cash back if the exchange goes under. And I want to make it very clear, I don't think Binance is going under. I don't think Coinbase is going under. You're better off, though, using one of the Bitcoin-only companies like Swan Bitcoin, River Financial, Strike. But there's not a lot of risk here holding US dollars or euros or yen or Australian dollars or other fiat on one of these exchanges, depending on your local insurance laws. And what you do is you let it settle there, and then once it's settled, you buy the Bitcoin and immediately withdraw it. That's the way to avoid having it sitting on there for too long. It's okay to have dollars sitting on there, because if the thing blows up, you'll probably be covered by FDIC insurance, at least if you're in the US. So if you're waiting to find the exact bottom, and I keep getting comments, well, I want to buy the exact bottom of Bitcoin. This is a bit delusional. Don't try to buy the bottom. Don't use leverage. It's much better to dollar cost average over time. You can also stick some limit orders in. I've talked about how I've had limit orders at 17,500 and 15,000. Obviously, that first one was filled. The other one is still waiting to be filled. But I'm also dollar cost averaging. And at this point, you're basically, if you think Bitcoin's going to $1 million and above, you're basically buying Bitcoin for less than 2 cents on the dollar. So it almost really doesn't matter where you buy it here, assuming you understand it and you've done your research. If you're still holding Bitcoin after this incredibly painful year, or really painful, call it 18 months, you are one of the strong hands. You're one of the diamond hands. Bitcoin has spent the entire year making its way from weak hands to strong hands. And it turns out a lot of those really weak hands were institutional investors. We can see the irony in that. But they're not good enough for Bitcoin if they don't know how to hodl it, and if they leverage it up and do stupid things. You play stupid games, you win stupid prizes. That's what's happening to Sequoia. That's what's happening to all these VC firms who bet on Sam Bankster fraud. I bought Bitcoin all the way up to 69,000 and then all the way down to 15.5 2 days ago. I'm still buying it. I'm not going anywhere, and neither are most of you. There's nothing like Bitcoin in the world, so don't accept any substitutes. And then I want to end on another optimistic note, which is that when you examine it objectively, I would say that Bitcoin has the strongest social layer of any money in the world. And this is something that's very important. You can have the most perfect software and you can invent your own cryptocurrency, etc. But it's very hard to reproduce Bitcoin's social layer. Bitcoiners have these friendships around the world. I feel like I know many of you, even though I don't know what you look like and I've never met you in person, but we have this very strong community. And when you meet a Bitcoiner, you immediately get along because you have all this stuff in common, even if you disagree on other things. So Bitcoin, this is one reason Bitcoin is going to win. It has the strongest social layer of any money in the world, and I'm including fiat money there. People who love the dollar, and there really aren't people who love the dollar or the euro or the yen. These are currencies that are imposed on people by their governments. Bitcoin has the smartest, most high conviction people of any currency, traditional fiat currency, or cryptocurrency. And I still love this quote when Stanley Druckenmiller was looking into Bitcoin and he talked to the famous investor and trader Paul Tudor Jones. Jones told him, he said, do you know that when Bitcoin went from 17,000 to 3,000, that 86% of the people that owned it at 17,000 never sold it? And Druckenmiller says, this was huge in my mind. Here's something with a finite supply, and 86% of the owners are religious zealots. This is what we mean by Bitcoin maximalist, and we'll turn it around and interpret it in a positive light. Druckenmiller goes on to say, I mean, who the hell holds something through 17,000 to 3,000? And it turns out that none of them, the 86%, sold it. And then you add to that the new central bank craziness phenomenon, which is obviously turned into reverse. But obviously when the central banks start printing again, and maybe even before that, we are going to see a reversal. So this is the very, very strong social layer that Bitcoin has. And it's only gotten stronger. There are a lot of crypto folks who are going to become Bitcoiners, Bitcoin maximalists after this. There's been a lot of pain. People have lost a lot of money. But it's in furnaces like these that the new Bitcoin maximalists are forged. And they're going to realize that everything I've been saying on this channel for the past 2 years has turned out to be correct. And it's going to become sort of embarrassing at a certain point to call someone a Bitcoin maximalist because you're just going to be showing your own ignorance to the world. Again, contrast Bitcoin social layer with Ethereum social layer. David Hoffman used to have a .eth, which he removed. And he's saying again, for the first time ever, I feel like I have nothing to stand on when I say that crypto is good for the world. Crypto is not good for the world. Crypto is Sam Bankman-Fried. And so don't tar Bitcoin with the same brush. It's a completely different thing. It is not an unregistered security. It's a scarce, pristine, digital asset that no one can take away from you. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish this next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.